to embezzle, have fraud and theft. No, actually, the goal is to not have embezzlement, fraud, or theft, which is why we have to keep the books current, because otherwise we're going to end up in that same situation as the bookkeeper that didn't catch the salesperson's theft until they were $30,000 in the hole. So our job is to keep consistent, current, and correct books. So if there is anything strange going on, it'll actually appear in the financials and be like, whoa, why did our office supply expenses double from last year? Oh, it's because our employee that's been doing procurement has a side hustle and they buy things with company money and then they secret them away out to their car and sell them on eBay. Not even making this stuff up, people. It happens. So what do these terms mean? Embezzlement is theft of funds that is put in your trust. So as bookkeepers, funds, the bookkeeping, all the accounts are put into our trust to a certain extent because we might have access to the credit card numbers. We might have access to the bank's routing number and account number. We've got access to a lot. We've got employee social security numbers and vendor social security numbers. If they're independent contractors and didn't get a tax ID number, it's a lot. Like identity theft issues is definitely something we have to think about. But embezzlement is when you take the funds that are not your own. So they're the owner, the employer's funds, the company's funds, or funds that are put into one's trust. This could be like a disabled family member's trust that you're in charge of, and then you're embezzling money out of it. So you're taking money from others for your own gain. It's always money that you've been put in charge of, right? It's money that you're supposed to be managing or keeping an eye on, and then instead you take it. An example of this is when the employee switched the direct deposit from the owner's account to their own account, and then they embezzled thousands of dollars through changing the payroll. Pretty scary, right? Other embezzlement issues I've seen, absolutely lots of family members. They're on payroll and they're writing checks to themselves on the side for 1,000 here, 1,000 there. We see business owners kind of embezzling from themselves, like taking money out of the company in weird ways that they shouldn't be doing. And that gets into the next part, really. It's more fraud. So fraud is the deception used for personal gain. So fraud is when we do things that we know aren't truthful or accurate out of some sort of personal gain. An example of this would be the business owner tells you to remove all of Bob's overtime from his timesheet because he didn't get pre-authorization. Well, legally, if you don't get pre-authorization to do overtime, you can be written up for it and reprimanded, but you still have to get paid for those hours. And that's why there should be managers and supervisors that are around that are noticing Bob's working an 80-hour week, right? Somebody ideally would be noticing these things. But if they are the only employee doing that work, or they are a manager or supervisor and nobody's paying attention, obviously that's on the owner. At the end of the day, it's on the owner for not noticing that Bob did all this overtime and was in the office all the time. And it's a conversation to have with Bob, but you can't just take Bob's hours away. Other sorts of fraud that occur in the bookkeeping world, business owners want you to write off personal expenses as business so they don't have to pay taxes. A lot of weird stuff going on like that. And so you don't want to have any part of fraud. You actually can't change employees' timesheets technically, only they can. It's one thing if like, oh, they did the wrong job or they have the wrong service item and fixing that. But you really, for someone's timesheet, you're not supposed to add or take away time. It's all supposed to be listed there already. So be careful with the timesheets, be careful with payroll. And be careful with writing off things that are obviously not a business expense, because we don't want to be caught up in a fraud case if something bad goes down. And sooner or later, something happens. Something comes up sooner or later that ends up showing all this. It could be 10 years later. And if you've already left the company, we don't want there to be any proof that you did any of this while you were with the company, and then you get pulled back into it. Theft is taking other people's property with the intent of keeping it. And the reason why legally they make a point of the intent of keeping it or the intent of keeping it from the original owner, we're not going to call theft your cousin borrowing your car with the idea that they were going to bring it back. Right? The whole idea of you're going to bring it back. So theft is proving that someone took your property and they had no intentions of returning it to you.